Good evening, guys. It's Saturday, November 27th. My name is Dave Coker, and this is Talking About Finance. So, wow, what a week we had last week, huh? It was pretty wild, right? We all know what happened, and it was a holiday shortened week, no less. Every sector on the heat map, once again off the wonderful FinViz site, every sector on the heat map has losses, and only a few had winners, and some of those losses are pretty extreme. S&P 500 was faltering all week. It got hammered in the last day, down some 234 basis points. The VIX skyrocketed north of 28. Remember, the long run average is 19. It was a follow-up on last week's increases. And recall, watch the video last week. I told you guys I was getting a bad feeling. It was just a little bit too quiet in the markets, considering all the stuff that was going on. The 10-year traded down to 1.49%. Oil dropped to 68.73. It's off 9.5% on the week, but still up about 42% year to date. Now, let's talk about the market. So we're up about 22% year to date. We've had one 5% dip before last week's drop. There's an awful lot of cash sitting on the sidelines. And as I shared with you guys, I have a fair amount of cash sitting there as well. And I was going to buy something Friday, but I wanted to see how it would shake out. So I'll definitely be going in. I've got a shopping list. I'll definitely be going in Monday. And we'll be buying some equities. I only buy dividend payers, as you know, so it might be a little bit different than what you're pursuing. But I would definitely invite you guys to consider dividend paying stocks. So they got hammered, but they're lower beta. So they don't fall as much. They definitely got hammered, but regardless, they didn't fall as much as the S&P 500 or these main stocks and this other stuff you see here, Google and Amazon, stuff like that, stuff I would not own, at least directly. So yeah, I think we'll be seeing some buying Monday. We'll have to see. I'll definitely be in the market Monday. We had very strong wage growth as well. So all these factors, I think we're going to see the market trend up to the end of the year and perhaps continue on the upside in 2022. Now, yeah, this is really good. Once again, this is off the Telegram channel. We're me and about 40 friends. We just talk about the markets constantly. And one of them put this up, the first CNBC or the second CNBC headline where the Dow was down 800 points in 2 hours. You can see it's 2 hours earlier. And then all of a sudden, an hour after that, it comes up in caps. You just got to laugh about that stuff, right? So it's interesting. It was definitely a really good drop. We'll have to see how it goes. Part of what we're seeing, guys, and I've been telling you guys about this for a while, is that there's a lot of garbage companies out there. And look at this. This came off Kalish Capital. One of my friends works over there and sent this over. She posted it to the channel. And we're looking at enterprise value of firms with EBIT, earnings before interest and taxes, less than their interest expense. They're zombies. And that's what I mean by the market's like a horror film. It's like a zombie. What in God's name are these companies doing listed? Why are they trading? Well, there's so much liquidity around. Lots of crappy companies have listed. And the chickens are going to come home to roost at some point. We'll have to see exactly when this all comes to fruition. But yeah, there's a lot of garbage companies out there. It's really absolutely incredible, right? Still, as we mentioned, the VIX skyrocketed last week, but don't get it all in perspective. Because check this out, traded into 28.62, you can see where the long run average is. I put the red line down there at 19. Yeah, we're right about where we were last year, or probably last May, I should say. We're certainly not as bad off as we were earlier on. So you can see this was definitely a good drop, and the VIX definitely spiked up, but it's not as bad as it could have been. Oh, and somebody was asking how you can make money off of this. Well, you can, of course, buy things that are leveraged. Or, you can buy things that are that will increase in value if the VIX goes up or decrease in value if the VIX go down. They're tied to it. But you could also get leveraged products. I know there's some 3Xs out there. I wouldn't go anywhere near them. But if that's the way you rock and roll, please rock and roll like that. I don't think it's too wise, unless you had perfect foresight and you could have seen this coming, in which case you could have made a bucket of money. So a lot of interesting stuff going on, guys. Here's a really good one. In the States, there's a discount. It's like Poundland here in the UK. Everything supposedly in the store is supposed to be priced for $1 or less. Well, they've raised stuff to $1.25. And this picked up a little bit of buzz in the media. What they totally ignored, nobody really picked up on, is there you go, 25% price increase, one time. Yeah, you want some inflation? There it is. That's a real strong one. Real strong driver of inflation. And here I've got an interesting chart. I've got the 10-year CMT, the constant maturity treasury. Of course, I always joke and call them vampire treasuries, vampire notes, because they never mature. And because they never mature, we got a real representative 10-year yield. We can't look at individual notes and stitch them together. We need this synthetic called the constant maturity treasury. And that's the black line. And you can see, guys, typically compared to the blue line, which is CPI, yeah, but typically the 10-year is yielding higher. There's some periods where it's a little bit below, but nothing like we got now. My God, look at CPI now compared to the yield on the 10-year. And the thing that's really interesting, and again, the media isn't really reporting this correctly, but you can mark this stuff down and come back. I've mentioned we're going to see another 18 months to maybe 2 years of above trend inflation. It's manifested in CPI now, but we're still seeing PPI, the producer price index, running sharply higher. So those increases will take time to shake out. We're going to have inflation for another 18 months, maybe 2 years. It's don't believe what the Fed says and what a lot of politicians talk about, that it's only transitory. It's not transitory, right? And the most important thing to think about when you consider inflation, they talk about it as being transitory and they try to convince people, oh, prices will fall back later. No, they won't go down, guys. One simple reason. A lot of the price increases are a significant driver of the price increases. Of course, it's the supply chain problems, but we're also seeing wages go up. So think about it. Who in God's name takes a wage cut? Nobody takes a wage cut. Your wages go up. We talked last week about how Germany's raising the minimum wage by 25%. They're certainly not going to drop it by 25% once they decide, the politicians decide, inflation's over. The prices are going to remain elevated. So as I always tell people, structure your portfolios accordingly. Inflation is going to be with us for a while. Here's a really good one. Now, if you're not familiar with Moore's Law, Google it up. Moore's Law, of course, put forth by Gordon Moore. He started talking about in 65, and we know since 75 it's been tracked. And basically, we see the capacity of integrated circuits, the number of transistors, doubling. And at the same time, the price is falling. So it's roughly over a 2-year period. They double every 2 years and the price falls every 2 years. And that has been true for quite a while. I can only go back to 2006 off the wonderful Fred site. But you can see from January 2006 to May 2020, we saw price drops, negative 8.6% year on year. Well, look at it now, right? 8.4% year on year. Again, these prices are not going to drop. They're not going to go down. It'll be interesting to see if Moore's Law manifests again. I suspect it will. But we do know that there are limits to Moore's Law, but we'll see that. But this is actually sort of cool. And again, you're not seeing this in the media. This is right off my research. Anything on these screens that's got Coker.me on it and the signature style of yellow bubbles, black letters, that's my stuff. And no, media's not talking about this. You're only seeing it here. And finally, here's a good one. Right? Now, I'll be honest, right? Well, I'll let you research this a little bit, but look at the new global reserve currency and why we were too stupid to see it coming. And I'm just wondering, I bought Bitcoin this week. I actually bought it twice on Friday. There's a whole story there. We won't go into it, right? Not fat fingers on my side. The exchange I used did a software upgrade, right? It was like Christmas. You put some money in and you place an order, and they execute the order twice. I'm too honest, though. I did get a hold of them real fast and said, you got a problem. And they were quite effusive in their praise. And I kept the second part. Well, I paid for it. They wanted me to send the second purchase of Bitcoin back. I paid for it. So I actually purchased Bitcoin twice this week. But one thing I'm wondering, looking at this cover, who's this we they speak of? I've been buying Bitcoin for years, every Friday. I hope you are too. Temporary fall, I hope. I'm pretty sure it will be. We'll see it rise up again. All right, guys, that's it for this week. You're going to have a good week. Just get in the markets. Don't be afraid. Just push some money in. And if you've got significant capital, don't push it all in at once. Use dollar cost averaging. Go on my podcasts, Finance Facts. You can pick up or look up dollar cost averaging. Take a look at dollar cost averaging. If you don't already do it, I do it. You should do it too. I do it with Bitcoin. I do it with stocks. And just buy some stocks this week. Maybe buy some crypto. Bitcoin's cool. Ethereum's cool. The other stuff I'm not so sure about, right? But yeah, get in the markets. You're just a bystander, and you don't want to be doing that. You want to be a participant. So you're going to have a really good week, real profitable week as we move into the end of the fourth quarter. Take care, guys.